So, good day, dear investors. I'm pleased to welcome you on another webinar from our office, Orion Securities. And this time, we want to present you an opportunity to invest into third tranche of bonds being issued by Vanagas Asset Management, part of one of the largest real estate developers here in Lithuania. And today with me, we have also a group CFO, issuer CFO, Raimundas Lukaševičius.
Good afternoon to everybody.
And during this presentation, both Raimundas and I will cover the information about the bond issue. We'll give you an update regarding the development of the project, since what I have mentioned, this is already a third tranche of the bond. So first tranche was issued in April of this year. So almost half a year already ago. During that tranche, 3.4 million euros were attracted. Also, we had a second tranche issue, which was completed in August. And during that exercise, 3.8 million of bonds were issued. And now we have 0.8 million euros of tranche size. Why such a small one? Well, because the whole issue program, as you can see on the left side, is up to 8 million euros. So actually, with this small third tranche, we are fully completing the whole bond program. This third tranche is a tap issue, meaning that we are issuing the same bonds under the same ISIN code as for the previous two tranches, and the terms are almost identical, meaning that maturity is the same. Maturity of the bonds is 23 months, so the bonds will be redeemed on 29th of October 2027. So around after 2 years from now. The coupon is paid semi-annually. The yield of bonds is 9%. This is one of the differences if comparing previous tranches. If you remember, if you have followed information, we started with a 10% interest yield. In a second tranche, we had 9.5, and now we have 9. Why such a dynamics? It's basically reflecting what we are seeing in debt capital markets of the Baltics today. So the spreads are decreasing, the interest rate is also lowering, and the yields being offered is reflecting simply that tendency. Regarding the interest, so I have mentioned regarding the risk profile and risk management, security we have in place. So these bonds are being secured by a registered pledge of shares of project companies owned by the issuer. So the issuer is a consolidating entity, consolidating a number of different real estate projects which are developed on project SPVs, and the shares of these SPVs are being offered as a security. And we have also a covenant which states that loan to value of such pledge at all times during the validity of bonds cannot be higher than 50%. Meaning that at all times, the value of these pledged shares is at least twice the nominal value of issued bonds. How value is calculated, since these are real estate projects, so it's quite straightforward. The value is based on the real estate valuation of the projects, and indebtedness is deducted. So debt is deducted, and then you arrive at a net value of the shares. Also, we have a pledge of receivables from the shareholder, the Vanagas Group, but this is more to align the let's say align the interests of the shareholders with the interest of the bondholders, ensuring that no debt is repaid during the validity of the bonds. Short intro about the issuer, focusing on finances. Raimundas will expand on it significantly more. We have a balance sheet, and I guess the point to take notice is the equity position of issuer. So in the middle of 2025, so half-year results, shareholders' equity of Vanagas Asset Management was equal to 30 million euros. Compared with the total assets of 37 million euros, which bring us an equity ratio of 80%, which is one, I guess, of the key points is this high capitalization level of the issuer, ensuring credit risk management and limiting all the possible credit risks. Regarding revenue line, we see a bit of a minus. Raimundas will also expand, but this is a usual thing for a real estate holding consolidated projects, since the projects are being revalued only one time a year at the end of the year, and half-year results, that's why are showing incurred costs, but not the improvement of value of these projects. So finally, a term sheet. Almost everything I have already mentioned, just maybe to focus on the current placement of the third tranche. We are running till 14th of November, so still this week and next week, and the books are closing on 14th of November. A bit difference from the usual allocation is that in this case we are applying a time priority based allocation, meaning that if investors are submitting orders earlier, and in case we have an oversubscription, orders submitted before we reach total issue size, so 800,000 euros, these orders are being executed. All the remaining orders are simply being cancelled. That's why we also urge investors, of course, look into the case, analyze, see if this is a right fit for their financial needs and ability to take risk. And if the answer is yes, not wait till the final day to submit an order to invest in these bonds. Covenants, one of the main, what I have mentioned, is ensuring that value of pledged shares is at least twice the size of the bond nominal value. Also, we have adjusted capital ratio, which adjusts the balance sheet on the simply deducting the receivables from the shareholders, both from equity size and asset size. And the covenant states that it should be not lower than 30%. At the moment, it's at around 72-73%, so we still have really a big buffer till this threshold. And early redemption is in place, such a call option for the issuer. So issuer can call the bonds soonest on 29th of April. If it is being called till we have half a year till maturity, 1% early redemption premium is paid out to the bondholders. If it is being redeemed later, so when less than 6 months are remaining till the maturity, the call can be executed without any additional penalty payout. So that's a short introduction. Now I'm giving floor to Raimundas. Hello once again to everybody. So thank you, Vikante, for a good introduction. Before moving to the projects themselves, let me provide some general context. So regarding the net asset value, NAV, this is the basis on which the overall value of the collateral is calculated. It reflects the ownership share contributable to us in a specific project based on our invested capital. So in other words, it's the value of the asset minus the liabilities.
And regarding the projects themselves, I would like to begin with our largest ongoing project, Moonai. It consists of nearly 500 apartments in total. This is a mid-segment development located in Limonai, right next to Šiaurės miestelis. We began the construction of the first phase in 2024, and the sales have exceeded our initial forecasts. The project has proven highly attractive to buyers, and as a result, we started the second phase earlier than originally planned, since the construction of the first phase is essentially completed and almost all premises have been sold out. Another well-known and significant project in Žirmūnai is Kaip Niujorke. It consists of two phases. The first phase is practically sold out. Only a few apartments remain. Construction of the second phase is progressing quickly, and sales of this phase are ongoing. We clearly see strong demand of both projects, and sales performance remains very solid. We wanted to offer investors and balanced collateral structure. So we also include more forward-looking project in the collateral package, the development on Pumpėnų Street. This project is located in Justiniškės on the border with Pašilaičiai. So let's look at the others. Additionally, we pledged the shares of the Nidos Bangos project. In the near future, we plan to proceed with the development of its second and third phases. And the fifth project, which is currently being under evaluation, is also planned to be pledged as additional collateral. We received the construction permit on the 4th of November, and we are now actively planning the next steps to move with this project forward. And finally, if the value of the pledged collateral were to fall to less than twice the size of the issued bond value, the information memorandum specifies additional funds to whose units we would have the ability to be pledged if required. Let's talk about the sources of the cash flows will be used for the redemption of the bonds. We have identified 6 projects as the key contributors. The Citus project, a completely new development on Mykolo Lietuvio Street, consisting of 213 apartments and 3 commercial premises. As of today, the first apartment reservation has already been made. The next project is on Tyzenhauzų Street in Vilnius. As mentioned earlier, this is also completely new development in Naujininkai in Vilnius, a higher-end segment project. We are now rapidly planning the next development steps. The project Kaip Niujorke, as noted earlier, construction of the second phase has begun. Since the project is not small, it includes 174 apartments and 11 commercial units. We anticipate that both construction and sales will be completed by early 2026. Dividend distribution from this project is planned for second quarter 2026. And Moonai project is progressing intensively. 84% of apartments from phases 1 and 2 have been sold, and preparatory work has been started, and for the next phase is under the way. And the next 2 we have also Ežero takais and Senamiesčio link. Ežero takais is in Vilnius on Sidoronių Street, located near the Ring Road and the Vilnius outlet, and Senamiesčio link in Naujininkai. Both are acquired last year. Sales of Ežero takais has already been completed, and we plan to distribute dividends to the shareholders in the second half of November. The situation with Senamiesčio link is similar. Only 2 apartments remain unsold. So, as I know for today, mainly 1 is unsold. In the last hour, I have found this information, and dividends are planned to be distributed in early 2026. About the funds we intended to raise through this bond issue, the purpose is very clear where to use them. Essentially, we plan to use the capital to acquire the new project, the land, and to particularly finance their development. As for new projects, you can see 6 of them listed in the table. We are currently in active negotiations and due diligence processes are ongoing. These projects are located in different parts of Vilnius. What is important to emphasize here is the following. All of these projects are located relatively close to the city center. We are not moving towards the outskirts of Vilnius, and we plan to develop either mid-range or, in certain cases, even premium class residential units. We do not plan to expand into commercial real estate development. We consider ourselves as experts in residential development, especially in Vilnius. We know how to develop projects, how to plan, how to manage construction, how to manage sales processes, and how to deliver projects quickly, efficiently, and profitably. This is our core strength, and we intend to continue focusing on it. We do not want to take unnecessary risks by experimenting with the new asset classes, although we do not entirely rule out cautious exploration of such possibilities. And even if we were to develop a commercial project in the future, it would be limited in scale compared to our residential portfolio. Our first and second bond tranches were successful, so we raised 7.2 million euros, even though we initially planned to raise 5-6 million euros. So how they are used? First, for the acquisition of new land plots and the development of those projects. For this purpose, 2 new funds were established. Demus Development 9, which has begun developing the project Miesto Akordai in Vilnius in the Šnipiškės district, and Demus Development 8, which acquired a land plot in Fabijoniškės. Second, through our directly managed companies, we acquired land plots in Naujamiestis and Kalnienė. These 2 categories combined amount to 3.9 million. And the remaining 3.3 million part was allocated to ongoing projects constructions by Citus. Nemunas, Mūnai, Ežero takais, kaip New York, Senamiesčio link. The result is clear. All these projects are actively progressing and investors can observe tangible development milestones. I would also like to emphasize that none of the funds from the first and second bond tranches were used to cover operational expenses.
Yeah, so switching back to the key dates related to the bonds. Before that, just one intro, please, if you have any questions, I already see that some questions are popping up. Use the Q&A interface to submit it, and we will cover it after we go through the slides. So key dates, what I have already mentioned, replacement is undergoing for this and next week. Then we have 18 November as an issue date for this third tranche. So on this day, the investors will see the bonds on their investment accounts. Next, we have a semi-annual interest payment, so April 29th, October 29th, and finally, final redemption in October of year 2027, meaning a bullet structure applied to these bonds. What investment highlights we see for this debt case? I guess was already covered by Raimundas as well. Firstly is, of course, the issuer. It is a top 3 largest, based on sales, residential real estate developers here in Lithuania. Also combined with the fact that it is a part of a larger group, which encompasses other companies related to the construction and also development like Citus. this group of companies has a significant experience, I guess more than 10 years experience in real estate development here in Lithuania. So this is talking more about the issuers, quality of the issuers operations, talking about the issuers balance sheet, what was already mentioned. Consolidated equity is equal to around 30 million euros. And the ratio of 80% shows really a strong capitalization. Finally, part of these assets under the issuer's balance sheet are being pledged for the benefit of bondholders. As mentioned, value is derived from the real estate market values. And then there is a covenant that the collateral should be at least twice the size of issued bonds, which, well, brings quite a let's say, solid security package. So that's again about bonds, and moving back to Raimund.
So about our history, a little bit. So in 2009, Vanagas has started our business, and on the first activity started with the first projects on 2012. The first developments of real estate projects were already in Vilnius, and expansion to Kaunas already started in 2015. And Demus Asset Management was established in 2018. This was like a new step for us to go to the fund system, where the funds are financing our real estate projects. And 2020, we have the expanding our structure and dividing into the three branches. I will explain more in detail further. And this gave us have good, clear structure to have a business clear and understandable to everyone. So in 2025, we started with the bonds issue, and 7.2 million are already raised through the first two phases. Our structure. So in the top we see Mindaugas Vanagas. He is the sole shareholder of the Vanagas Group holding company. The Vanagas Group is the main, like a structure company, which oversees three core branches of the businesses. The middle branch and the main one is the issuer, Vanagas Asset Management. We consider this our internal investment holding, which carries out investments into selected, clearly defined, and in our assessment, relatively low-risk businesses. These relatively low-risk businesses are the types of projects we have already discussed. All of them share a common feature. They are located close to the city center. They have building permits already in place or expected shortly. And we are actively progressing through construction and sales. The second branch is Citus Group. This is the branch that is widely visible in the market, in media, in advertisements, in other spheres, or physically when passing by ongoing projects. What does it do? It executes construction projects and procures various real estate related services, sales management, construction management, marketing, and other real estate services. As the issuer, we purchase these services, and based on our experience, we see that Citus, with its ability to consolidate all services under one group and its long-standing expertise, consistently delivers a very strong price-quality ratio and excellent speed. The third branch is Vanagas Invest. The issuer has limited direct interaction with this branch. This branch encompasses long-term investments, relatively high-risk ventures, or other businesses activities. Examples include Oxygen Group, or a ventilation system manufactured in Kaunas, or Profitus, a crowdfunding platform in which we hold a significant stake, and the fund management company Demus Asset Management. From a numerical perspective, the companies owned by Vanagas Vanagas began real estate development in 2013. And over a little more than 10 years, we have developed more than 180,000 square meters of real estate. That is over 3,000 apartments sold to clients. The vast majority of these projects were in Vilnius, but we have also developed projects in Kaunas, Druskininkai, and Nida. In total, the number of completed projects has already reached 25. Looking ahead, we have more than 10 new projects planned for launch this or next year, which is a significant pipeline. During second and third quarter of this year, we achieved record sales. And over the first 9 months, our sales increased by 82% compared to the previous year of 9 months. Based on this performance, we are currently among top 3 apartment sellers in Lithuania. And we have already spoken about Muni project, New York project, and others. And here we provide some other information in more detail here. I would like to highlight the Nemunas project, the construction of the former Nemunas Sanatorium in Druskininkai. The development consists of 2 phases. The first phase is essentially nearing completion, with almost 180 already sold apartments. And we have now launched construction and the reconstruction works for the second phase, along with the corresponding sales, which are progressing very successfully. Here you can see some visual material illustrating these projects as well. Senamiesčio link we have discussed. In Kaunas, Radio City project located in Žaliakalnis is currently progressing with the reconstruction of its second phase. 7% of the apartments have already been sold. We have also preparing for the second phase in Nida, while the first phase is being developed with our related holding, Vanagas Invest, where the apartments have already been sold. So going to the next, among our newest initiatives, the project on Tyzenhauzų Street focused on smaller scale but high quality residential units. Miesto Akordai project in Šnipiškės will significantly reshape the face of this district. Meanwhile, the Pumpėnų Street project in Žirmūnai consists of mid-segment apartment buildings with convenient infrastructure for families. And our newly acquired project on Panerių Street in Naujamiestis is also progressing. Planning and documentation work is already underway. Continuing on, here is a map showing the locations of our current projects. When planning new acquisitions, we make a deliberate effort to position them in a way that avoids cannibalization among projects. Here, these you can see in Vilnius, and in the next slide, we can see the places and locations in Kaunas, Druskininkai, and Nida. All of them are in the centers or in the attractive places. Examples of projects. So if you wish to assess our reliability, the best indicator is the track record we have built in the market. So Karaliaučiaus Slėnis, a large 10-phase residential quarter developed between 2014 and 2019, comprising approximately 750 apartments and residential houses. The project received national recognition of the best residential neighborhood in Lithuania. This is an important proof of our ability to manage a long, multi-phase development from the first excavation works to handing over the keys. The next project, this is 125 apartments and 4 commercial units completed in 2022-23 years. It was one of the first projects to comply with the 10 business architecture rules, representing high standards of quality life, aesthetics, and urban harmony. Radio City Phase 1, 384 lots and 62 commercial units, part of a two-phase development. The first phase built from 2020 to 2023. This is a sustainable building conversion in Vilnius prestigious Žaliakalnis district, a modern lot community created in a former industrial area. And Kauno Senamiesčio apartamentai, 54 apartments and commercial premises developed in 2 phases. The project was recognized as the best future project in Lithuania. This demonstrates our capability to work with the historic urban fabric while creating modern value. The overall message is simple. Different cities, Vilnius, Kaunas, different types of products from residential quarters to conversions, yet the same outcome. A completed project and a solid foundation of value for new developments. And regarding our structure of the issuer, it is important to understand that it is real estate development. This type of structure is quite standard. Each project is developed through a separate entity. In our case, these entities are either funds or SPVs, individual companies through which specific projects are developed. Within this structure, there are 3 groups of entities worth distinguishing. The first and most important group consists of the projects we are currently developing. Victory Development 4, which is developing the Mūnai project. Demus Development 6, responsible for Pompėnų Street. And Victory Development 5, the company behind Cape New York project. These 3 projects have already been presented as part of the collateral package of the 5 companies. In addition, we have other projects we mentioned earlier, Ežero Takai, Senamiesčio Link, Nemunas, Sava, and others. There are also several additional companies like 2 projects that we have already been developed and sold, where final closing works and are underway. An example is the Citus fund, which has completed the sales of its last project, Miško Ardai, and is now going through the fund closure process. The last group consists of companies prepared for the acquisition of 2 projects. We refer to these as empty companies. So, as you can see, these entities we typically hold in as a significant share, usually more than 50%, although the percentage varies. In some cases, we hold 30%, while in the others, we hold 100%. And let's talk now about our management. A few words, who is responsible for this business. Mindaugas Vanagas, founder, sole shareholder, and chief executive officer. His experience includes leading Vanagas Group since 2009, Vanagas Asset Management since 2019, and Vanagas Invest since 2020. He is also the founder of Citus and Citus Construction, that is established in 2012, and he's CEO from 2012 to 2020. Me, Raimundas, I'm a chief financial officer. So before I joined this group, I worked at CFO and City Development, Modus Mobility with CTB, Aventus Group with crowdfunding, and And I was also working like deputy CFO on Palink or IKEA shops earlier. I believe that my accumulated experience in both corporate finance and fast-growing development businesses will be fully applied here in a mature and steadily growing business group. Our team also includes Šarūnas Tarutis, investment director and CEO of Citus, who has been with the group since 2018. He is responsible for the architecture of investment decisions and the capital raising logic, ensuring that the project development pace is aligned with the risk profile and return objectives. Vilius and Laura, our fund managers, each with many years of experience in real estate analytics, investments, and fund management. Both are long-standing members of the company and have significantly contributed to investment management across the group. Now let's talk about the financial statements. The most important line in this profit loss statement is income from investments in the shares of the parent subsidiaries and associates. This line reflects the share of the profit generated from projects that have already been developed and realized. It may appear somehow unusual that in a consolidated statement, the largest portion of profit comes through this line. However, this is directly related to the issuer status. We operate as an investment holding company. This means that the company does not directly control all funds and project SPVs, and therefore profits from them are accounted for under the ownership method. As for operating revenue, 2 million essentially consists of apartment rental income and revenue from projects fully controlled by the issuer. The loss recorded in the first half of 2026 is due to the fact that we do not perform mid-year property revaluations, as this is not required under financial reporting standards and in the real estate business. It is normal to see a temporary loss in interim financial statements because property value increase only by acquisition cost during the year, not by market value. The full fair value revaluation is performed at the year end as it is standard practice. And let's move to the assets. Here it is important to note that the largest portion of assets consists of non-current assets, with the biggest share represented in investment in associates. These are the projects we manage in which we hold a significant stake, but which are not fully consolidated. A substantial part of the current assets consist of loans granted to related companies. These are our internal investments, which are repaid through project realization once the land plots obtain building permits and are prepared for construction. During project development, cash flows circulate among the group's companies. The cash balance held in accounts is sufficient to ensure ongoing operations and to meet all existing obligations. Let's talk about capital. So here the trend is very clear. The majority of our assets are financed with equity. Equity accounts for 80% of total assets, and it is a very strong indicator. We have relatively low levels of liabilities. Long-term debt increased in the first half of 2025, following the issuance of the first bond tranche by 3.4 million. Short-term liabilities have decreased and we are well managed. This is related to the repayment of bank loan and shareholder financing. This means that today we have a very healthy financial structure with which allows us to react quickly to market developments and confidently plan the next stages of our projects.
Thank you, Raimundas. So moving back towards the issue structure, bond structure, of course, we always urge the investors to fully read the description of risk factors. Here we have only the summary. The full information is available in the information document, which is published online. So really, we urge everybody to get acquainted with it. Just to mention what the main risk factors are indicated regarding these investments. First, of course, general business factors. Real estate is a part of the economy. It's a cyclical sector of the market, and of course, the prices of real estate can fluctuate depending on the macro conditions, macro factors such as interest rate. We saw a bit of slowdown in the sales 2 years ago when the interest rates peaked. Now we are seeing a comeback of the activity when interest rates are going down. So this risk, of course, still will remain. Regarding group specific risk factors, of course, we mentioned that the projects undertaken or managed or invested in by the issue of Vanagas Asset Group, Vanagas Asset Management, these are considered as, from the spectrum of all the projects undertaken by the group, as lower risk, meaning that we either already have the building permit or will have in the nearest future. But anyway, of course, these are projects where still have to be constructed, developed. So some amount of real estate related development risk is also present. Regarding the bonds, well, these are the usual, more or less, risk factors. Liquidity, it's not guaranteed. Bonds will be, this third tranche will also join the previous two tranches in listing. It will be listed on First North Vilnius. However, of course, liquidity is not guaranteed if investors decide to sell before the maturity. And then prices can fluctuate depending on interest rate, inflation, and other factors. And one, of course, more maybe specific is that early redemption risk. From one point of view, the money reaching investors earlier could be a desirable outcome, but for others who, for example, want to secure this yield for the whole issue, it could be a risk if the bonds are redeemed earlier. But again, please, get acquainted with the full risk factors when reading the information document. To sum up, coming back to the main term sheet slide, third and final issue under the program of up to 8 million. So third issue is 800,000 euro size. Yield offer to investors 9%. Coupon of 10% paid out semi-annually. Redemption after 23 months, so end of October 2027. Subscription, as I mentioned, running till the next Friday. And what's also very important to note is, again, allocation based on time priority and not a proportional allocation. So again, urging investors who decide to invest and decide that this is a suitable investment, not to wait to submit an order till the last date. Minimal investment amount is the same as in previous tranches. One bond, in this case, the price of one bond is 1,022.87 euros. Summary regarding security, what I mentioned, pledge provided of shares of subsidiaries, project subsidiaries, which only developed real estate projects, and covenant that the right value of these shares has to be at least twice the nominal value of issued bonds. Additional covenants, adjusted capital ratio should be above 30%. Now it's above 72-73%. So again, structured to ensure that risk is being managed, credit risk is being managed by the issuer. And yeah, and the redemption, what I mentioned with the premium, if redeemed after April 2026 and without premium if redeemed after April 2027. So yeah, these are all the slides we wanted to cover, and now we can go to the question. Maybe the first more general one. Could you comment regarding market situation in Lithuanian real estate sector? What are the dynamics regarding the prices and activity? So maybe just short updates. So what we see that the prices of the apartments are increasing. If to share a little bit dynamics or some figures, so in Vilnius the prices of new apartments raised in October compared to beginning of the year plus 11% and plus 13.9 if comparison to October a year ago. In Kaunas, it is that from the year beginning it increased by 9%, and if compared to the year ago, October, it is plus 10.3%. And we see also the secondary market increases as well, and it gives us a very strong hint on what we understand and see that more demand is in the market than the supply at the moment. I could not say that it is a very huge difference, but a little bit we see it as like a tendency that is ongoing at least half a year, even more. So this gives us in favor to develop and to fulfill this demand to be profitable in the future. Thank you. More general question about your strategy. How does the company's investment model differ from traditional real estate developers in Lithuania, if it differs? It is quite difficult to say that we have a lot of analogs in the market as we do, but of course we have some companies that act similarly, but either different segments, either different structure inside company, it can have such things. But usually what we could say that this model is not very far away from the others, but what we see it is that the strength that we concentrate the people and we concentrate and the construction part, we concentrate the acquisition of the land plots, and also give this to what the market needs through the sale machine, and we are listening to what the market is demanding for us. Yes, so regarding risk management, could you elaborate on your approach to managing liquidity given the ongoing and future development projects? So if we have very huge projects, we divide them in the phases, and when we see if this phase is going too quickly, so we start the second and next one, and if it is more slowly, then we do not start the next one. So that's how the money is empowered to work. And the second thing is the price management. We see what the prices are in the market, so we check it quite frequently. What are the prices of ours, of the other competitors, and just to be in line to fulfill demand. Yeah, regarding the yield, the third tranche offers a 9% annual yield. How did you determine this rate, and how does it compare to the first and second tranche? So maybe I'll just repeat that the issuer started the offering with the first tranche in March and April of this year, and offered yield was 10%. Of course, we have to keep in mind that during the placement period, some volatility was present in the market due to the ongoing tariff craziness in the US. This was one of the reasons why the yield actually was increased to 10% from originally planned 9%. Also, when the follow-up issue of second tranche was undertaken in August, we had 9.5% yield, and now we're offering, the issuer is offering 9% yield. How it was arrived? Well, I guess reflecting overall tendency we see in the market that interest rate is contracting a bit. The spreads of yield spreads are also decreasing, and basically this is more or less reflecting the market situation and debt capital markets. As from the issuer side, what was mentioned that in autumn the sales are picking up, so we have less and less difficult sales. So I would not say that we have difficult sales, but we see that the liquidity of our sales of the apartments is very high. So we do the risk not to sell them is close to zero. So of course we can predict that it can be some of them, but what we had earlier or some years ago, it is much less than it is now. So there is no need to give additional almost discounts, and it goes because the market takes down. So yeah, so basically it's, in our opinion, reflecting fairly the credit situation of the issuer. Of course, the improvements will be seen in yearly accounts, and reflecting the tendency of price of debt we observe in the capital market. And yeah, we have already a last question, a really specific and I think smart one. Would you consider starting sharing project level data on units under construction and pre-sold, as well as on the project level capex developments on quarterly basis? I guess publishing it on a First North stock exchange. No, we do not plan to do that. It would be quite huge from an administrative work to do that from one side, but the data what is included, we can for sure say that it is audited, given all we are transparent in order to disclose what we are in all our audited reports. All the funds are not only audited but also supervised by the Lithuanian bank. So we have so double, triple supervisors on funds. So I think that we are quite enough controlled and transparent to this whole time. Okay, and I guess capex is also could be considered as a bit sensitive data. Yes, for our competitors as well. Yes. Okay, so as mentioned, this was the last question we had. So thank you very much for investors who submitted it, and yeah. I'd like to thank also Raimundas for attending, investors also for listening. And as mentioned, please take your time to analyze this case. If you have any questions, please submit it online to Orion. We will try to answer everything. And then once you decide, submit an order without waiting for the last date because of this time priority-based allocation. And with that, I thank you and wish you a good remaining time of this day. Thank you. Thank you very much and have a good day.